This is Frontier Opening Bell, Monday, the 10th of August. I am Bosin Omofaye. Let's get the show started. Welcome, everyone. Thank you, Chima Ukadike, the consumer goods analyst at Vertebra Capital Management. Good morning, Chima.
Good morning, Bosin. Nice to be here.
Thank you. Great. And Ali Kansacho in Nairobi, the rich man at the Rich Frontiers Management.
Morning, Bosin. Good to see you.
It's good to see you too. Thank you, everyone. Let's just a quick rundown on the Pan-African markets. Even though this morning the Saudi Aramco's oil story seemed to catch my attention, I'm sure we'll squeeze that in somewhere within the show. But Nigerian market gained a weekly 1.41%. That was a big story. Again, the earnings across the Nigeria market space was uptick last week with a raft of corporate announcements of mergers and acquisition of some sell-offs, buyouts, whatever, sell-off by AXA Mansard Insurance of its pension. So a lot of stories around the Nigeria space. Ivory Coast was down 0.26%. Egyptian market 1.06%. It came back from the holiday over a previous week and did a massive 4-day rally for the North African market, Egypt, and then you have in Tunisia, as well as in Morocco. Kenya was 0.66%. South Africa was down 1.56%. Talk about East Africa, where the Moody's latest rating actions have some significant impact for the Kenyans' neighbor, largest neighbor, that's Ethiopia. But the banking sector, which was getting to my head earlier, where Cooperative Bank of Kenya is acquiring 90% of stake in Jamil Bora, the Central Bank of Kenya says the deal can go ahead. Meantime, the central bank also in Nairobi sold treasury bills auctions worth about 30 billion shillings. NSRB cut Rwanda's credit outlook to negative from its debt grade at B+. This is not really good time for these rating actions and outlook on a number of African economies. WPP Scan Group half-year profit 1.58 billion because of the subsidiary sale. Let's bring in Ali here to speak to this. Maybe if you have a minute, we can touch on the Dar es Salaam Mwalimu Commercial Bank.
Yes, Mwalimu Commercial Bank, one of the smaller banks in Tanzania. It's quite an illiquid market at the moment, but essentially, a fast-growing bank looking to expand its footprint. But the economy in Tanzania, according to the Tanzanian data point, is one of the fastest growing in the world. According to the IMF, it isn't. But so far, so good. I think Mwalimu's got an expansion plan there. If I can jump to the Moody's ratings action, there's also a headline downgrade for Ethiopia and Rwanda. Essentially, we're going to see a lot more of this pass on. I think this trend will be in place for a while. As you know, the revenue side has gone down dramatically. Governments have had to step up expenditure, particularly on the health side. Rwanda's been hit very hard by tourism, lack of. This is a big part of the economy, the guerrillas. And also they've made a big push into conference tourism with a lot of development in Kigali, a very safe city, very popular destination. I think it's in the medium term a very, very good investment, but short term it's hitting a bit of turbulence. Ethiopia, look, we've had a lot of challenges in Ethiopia, of course, of late. You've had the political uncertainty, you had the internet lockdown in order to try and gain control of the street. You've had a sharp slowdown in that economy, and I think this Moody's ratings action is just a realistic development, I'm afraid. Ethiopia are trying to make a lot of reforms. They're going to be selling a stake in the telco, Ethio Telecom, which did very well. About a week ago, we had the full year results. They're looking to put together a stock market, and at some point they're looking to free up the currency. But for now, this is a very turbulent moment for Ethiopia. Plus, they got very, very high growth in the COVID numbers that I'm seeing. Co-op Bank is acquiring Jamii Bora. This is part of the consolidation process we're seeing in Kenya of the banking sector. Jamii Bora was probably, out of 42 banks, was in the bottom quartile. And this was largely maneuvered by the central bank and accelerated by them. WPP Scan Group is an interesting company. This is the main advertising company here in East Africa. They had expanded actually into West Africa, but they've now sold out those West African assets, which was why they delivered a first half profit, which was purely driven by these asset sales. The actual underlying organic numbers were quite soft, and there was a big bad debt provision of about $3.5 million as well in those first half results. And the question is, they were talking about a very big slowdown. Their clients are the big blue chip clients, the telcos, the breweries. I think that gives us a very good insight into how the economy is looking, and what they were saying is they're seeing their clients scale back very, very dramatically. Final point with the T-bill auction, we've had these very, very liquid auctions in the last few months. But what's interesting is when I looked at the maturity profile for Kenya, the central bank has very effectively moved that maturity profile further out. And that has been a significant and very positive development, because debt's been growing, but they've managed now to increase the length of the maturity profile. And I think that's a positive development out of the central bank.
But again, if you look at the currency, just give us 30 seconds on that. How does all this debt ramping up of treasury bills impact on rates within the Kenyan markets and, of course, the shilling?
So the shilling is trading very close to a record low again of 108.10 just before I came to speak with you. It has historically been one of the better performing currencies on the African continent, in point of fact. But technically on the charts, given the low interest rates that have been engineered in the front end of the curve here by the central bank, and the overall COVID economy, I'm very worried about the shilling. I think the shilling could easily drop quite sharply, particularly because the level 107.75 had held since 2011. We broke that level, and in my experience, when you break such a long-standing a level, you tend to see an acceleration. And the IMF, final point, previously last year were complaining, saying that the shilling was too strong and that the central bank was spending too much trying to maintain the value. So you've got a little bit of a perfect storm, and you could see the shilling slide a little bit more.
A bit of a similar story with the Nigerian currency here about defending the naira with the FX reserves that is now thinning out, and now the NNPC, the State Oil Corporation, is trying to leverage oil prices and a few other things to try and help the fiscal authorities. Chima Ukadike from Vetiva Capital, give us a bit of a background here with the Nigerian story before we go to Chima in just a minute. The stock market was just very bullish last week. I'm sure Chima will look at the consumer goods side of that. But the top story on the macro side was President Buhari has been given a thumbs up for signing the amended Companies and Allied Matters Act 2020. It was first rolled out about 30 years ago. A review in 2004 didn't go deep enough. So 20 years down the line or so, we had another review, which has now been amended, signed, and now everyone is on the street talking about it. How will that go to help the business and ease of doing business in Nigeria? Means everyone's guess. AXA Mansard, consolidation within this sector is going ahead. Deadline for insurance sector, full consolidation, new deadline is September next year. So AXA Mansard threw out his pension subsidiary, sold that to Usasia Limited. We don't have an idea of how much this cost, but again, if you look at what FBN Holdings did with its insurance company, that gives everyone an idea that we'll see more of this within the country's financial space. In Cote d'Ivoire, the Banabe says its profit after tax dropped 74.35%. In Ghana, Universal Merchant Bank profit rose year on year in the first half, 60 million shillings. Uchenna, as a bit of Chima, are coming quickly and checking with us here with the Nigerian space for the markets. We just finished the week.
Thank you, Boston. So, like we saw over the last week, the Nigerian Stock Exchange gained, the NSE gained about 1.41% week on week. This is the second week of consecutive gain we've been seeing in the markets since earnings started being released from many of these companies. We've been seeing positive reactions to it. We believe that a part of these positive reactions is because many of these companies had priced in that some of these companies many of these investors, had priced in that some of these companies will be releasing poor performances. And so now that they have come out with better than expected results, we're seeing them retract their previous positions and then place more positive ones. So we saw this affect 4 of the 5 major sectors. So the banking, industrial goods, consumer goods, and oil and gas sectors closed the week in a positive region, with the insurance sector closing the week in the red. For the consumer goods sector, we saw that the major lifter for that sector was, among others, flour mills. They posted a very positive results during the course of the week, I think on Monday last week, where they grew PAT by about 184%, which was very significant for the full year. So after that, we saw that investors started to show positive sentiment towards the stock, although we still saw some profit takers before the end of the week. But I believe that was the overall sentiment that helped to boost the sector during the week. Going forward, we should still see that we'll see some positive sentiment, especially given that many of the banks have not released their results. So if we see that some of the tier 1 banks release their results during this week or even in the next, we will continue to see some positive results, some positive sentiments, given that we may expect to see some positive results given the other banks that we've seen, and we've seen some good results from them. For the consumer goods sector and other sectors as well, we expect that we may see some profit taking, especially given the gains we've seen over the past 2 weeks at least. We may see that some investors will come in to take profit. Same goes for some of the other sectors as well. One sector that we may see the stable positive sentiment is the industrial goods sector. The sector has been the most positive sector yet to date, gaining about 6.72% yet to date. So we may still see that the positive sentiment in that sector continues, given that it hasn't really gone with the flow of other sectors. But that's expectation for the next week. We should see a mix with the banking sector in the northern region, while we may see some profit taking in the other sectors.
Chima, very interesting overview you've given us. What we see on the street in terms of exchange rate over the weekend, we saw the Naira trading 600 to the British pound, about 500 or so close to the US dollar. Do you think that we'll see this pressure on FX liquidity and consumer spending? Do you see this as key headlines to watch for the consumer goods space into the second half of the year? Because again, we're getting to the holiday season and the number of end of year holidays, and we expect consumer spending to be strong.
Yes, normally towards the end of the year, towards the celebration season, we should expect that consumer spending will be stronger. But given what we have seen in the first half of the year in terms of income levels and in terms of economic activities and depression to consumer wallets, we expect that to be a bit tilted towards the end of the year. One is given the rise in inflation levels, with the increase in food prices and all that, we've seen that affect disposable income of consumers. With the inflation, with the FX rates, like you mentioned, given that most of our consumption here is imported, we expect that we will see that pressure in the forex market affect consumers' demand and affect consumer spending even in this time. So yeah, that's basically it for our expectation. We expect that will pressure consumer spending even as we enter into the celebratory season.
Okay, thank you. Let's check in with the Southern African market for just about a minute and looking there. The South African bourse was down for the week, but then that was dragged down by the President Trump's executive order on TikTok and WeChat. Meantime, South African Reserve Bank reported the net FX reserves 48.1 billion. That's much higher than 43 billion that was reported in the month of 45 reported in the previous month. South Africa's government says it's cutting its bond purchases much lower. And in Zimbabwe, the food poverty line index shows per person $950 in the month of June, and for households of 5 individuals, 4,749. The diamond exports in Botswana plunged 68%. That's quite a big figure, Ali.
Yes, so let me start with the Johannesburg Stock Exchange. This was all about Naspers. Naspers, of course, was the old apartheid-era Afrikaner media business, which morphed into one of the fastest-growing businesses in Africa by buying stakes, and the stake that really transformed its fortunes was the stake in WeChat. Then they decided that they weren't getting a great, but they're also the owners of DSTV, and they were saying, we're not getting a good valuation, you're undervaluing our business. So they spun off some of the WeChat assets. I think they listed it in the Netherlands. They spun off DSTV. So just to give you a sense, I think it's about nearly a third of WeChat is what they earn. They bought it right at the beginning, hundreds of, at least $100 billion profit, actually. So what this is, Trump's executive order, which is forcing TikTok to divest out of their North American assets, impacted the price in Johannesburg, and that's why you saw the stock exchange trade off on Friday. SARB, that's the South African Reserve Bank, net reserves hit $48.1 billion. I think that's to do with an influx of cash from the likes of the IMF and others, and also a revaluation probably of gold reserves that the central bank is holding. But obviously, if you look at recent data points, the gap between revenue and expenditures, the widest it's been in a decade. So you could see quite a sharp drawdown. This might be the peak in those reserves that we're looking at. The South African government cutting bond purchases, that's an interesting development because as far as I can see from the data, foreign investors have yet to step in meaningfully since the sell-off. And it's interesting that number's gone down. I suspect that number's going to climb over the next 2 to 3 months as the government is forced in to support the bond market. Zimbabwe, the food poverty line just speaks to the dire situation that we now have in Zimbabwe. We've got the president and his number 2 apparently falling out. We've got a chaotic situation. This very famous Zimbabwean lady writer who's up for a Booker Prize was arrested. Hopewell Chirono, a widely respected journalist, is locked up, and all kinds of situations. I kind of think it's a breaking point moment in Harare, and unfortunately, we're seeing it in that hard data point with the food. This is the bread basket. This is the irony. This is the bread basket of that part of Africa, and really to have the poverty line declining like that is simply outrageous in my view. Let me finish off with Botswana diamond exports. It's interesting, of course, as we're all locked down, I suppose, none of us are splashing the cash on diamonds for our partners. I think this is the quarantine economy for you.
I would rather do gold than diamond now.
Yes, probably everyone is switched and they're storing gold and buying their wives' bangles rather than stones. But It's an interesting data point. That's a pretty big plunge, isn't it? But historically, if you look at diamonds, they are highly correlated to the GDP, and we've seen such a sharp slump. People have reined in their horns, but as you correctly said, probably buying a lot more gold, which remains above $2,000.
Interesting. So Chima, would you rather do gold than diamond?
Take anyone I can get.
Like that. Ali, you can see she wants the best of the two worlds. Diamonds are forever.
That's right. Great song by Shirley Bassey. You might have forgotten it, but it is.
Diamonds are forever, and you can tell. No one can tell when diamond will make a big comeback. At some point, perhaps when this is all over. So she rather have some diamonds for today because it could be there forever. I appreciate that. But again, if you look at the Nigerian space, Chima, what's your big take on the macroeconomic environment as you see what the likely impact will be on consumer goods?
So for the macro environment, we still see some pressure for consumer wallets. When we look at inflation, we still expect for the month of August at least, for the month of July at least, inflation figures aren't yet. But we expect that we'll still see a rise in inflation, given the pressure we expect to come in from food. Also, when we look at FX pressure on consumer wallets, we expect that will still take its toll as well. With the level of clients we expect, but although given the positives we're getting from some of these companies in terms of their earnings, it seems like it wasn't all as bad as we had expected. For instance, the breweries that we've been talking about, NB, we had expected their results to come in significantly worse, but they managed to pull it off, although they recorded significant declines when you talk about their year-on-year performance, even their quarter-on-quarter performance, but wasn't as bad as we had expected. So in the end, we are thinking that maybe it wouldn't be as bad as we had expected for the full year, although we still expect to see some decline. So while we still expect that there will be pressure on consumer wallets, we might still see some positives in the full year. So taking that to some of these consumer goods companies, we expect that we may see a turnaround for them, especially in Q4, where we'll be seeing, like you said, the celebration seasons. So while we expect that we'll still see some declines in maybe top line with increased operational expenses in terms of fueling costs as PMS prices rise in line with oil prices, or rather fluctuate in line with oil prices, we may see the operational costs increase. We may see that we have increased expenses. In terms of finance costs, we expect that they'll be able to make that a positive for them given the low interest rate environment. So we're still we're still a bit positive on some of these consumer goods companies. That is when compared to our previous position before the beginning or before the release of some of these Q2 results. So we expect that we'll still see some positive surprises for the rest of the year.
Okay, great. We appreciate that for the consumer space. It's a conversation that will continue to the rest of the year. Let's just bring in quickly the North African space. The Egyptian and the Moroccans and the Tunisian markets came back after that very long holiday previous week to have a very interesting trading week. The Saudi Egyptian investment finance reports a net profit of about 13.4 million Egyptian pounds at half year. Meantime, the cement company Mansa board is raising capital at the meeting to be held in a couple of days down the line. Morocco's second quarter jobless rate, 12.3%. Well, look like the tourism sector is the one taking the biggest hit there. Meantime, in Tunisia, the three new 2020-2021 bond loans will be tradable as from today on the exchange. We'll track that for you. Ali, 1 minute here on the North African market. I know this is the chicken coming home to roost for Morocco with the unemployment numbers. I know tourism is going to be the #1 on your list.
So absolutely, and this is symptomatic of all the big tourism economies across the continent. Morocco, you can see, has moved 4.2%, and Morocco heavily, I think, the most visited of all the African countries when it comes to tourism. So you would largely expect that, and of course, tourism has a follow-on effect for each person holding a job. There's a high dependency ratio, and I think when we look at it, when we look at that situation, we're going to see this replayed in a number of other economies. Morocco is fortunate in that it's reasonably diversified. We've got other economies in Africa which are entirely dependent on tourism. Of course, South Africa is another big tourism destination, and that's been locked down and still is locked down. So we're going to see very, very severe hits coming from tourism. My concern, Boyason, is that we're not going to see any silver bullet V-shaped recovery. It's going to take quite a long time for this to return, and I don't expect it to return before the middle of next year, realistically. So I think this is something that's going to continue to be a big drag on a number of economies.
Interesting. What's your take on the North African markets? We saw a very decent trading week last week after the holidays. Monday was from Tuesday down to Friday. It was a very interesting trading week.
So I think what we're seeing is people, particularly external investors, tiptoeing into the markets, and the first markets to react are these ones in the Maghreb, in the north of Africa, Egypt, Morocco, Tunisia. These are liquid markets. People understand them relatively better than some of the ones further south, and I think that's why you've seen a better reaction. And also those economies for now probably looking a little bit better than ourselves below the Sahara.
Okay, great. Let's leave it there for today. Thank you very much, both of you. Ali Kansachu in Nairobi at Rich Frontiers Management. Thank you very much. Have a great week ahead. It's a business day. We have another full trading week. Chima Ukadike, the consumer goods analyst at Vertiva Capital Management, licensed investment bank and securities trading firm in Lagos. Thank you so much, both of you. Chima, thank you so much. Have a great day.
Thank you.
And Ali, see you again tomorrow.